Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It's September 25th. This will be our chart lesson for the day. And I know I had a little problem with the volume yesterday, or the sound, I guess I should say. Not sure what happened. I think the battery was low on my headphones that I use for the recording. I didn't do anything any different than I always do, and when I got done, I noticed the volume was not very, or the sound was a little scratchy or a little muted or something, but I know it wasn't well. But I wasn't gonna do a 30-minute video over again. Plus, I talked about a lot of interesting things at the beginning, and I couldn't remember what I spoke about or not. So I just went ahead and uploaded it and posted. So I hope it wasn't completely unbearable. But anyway, I did a little test tonight on a quick video, and it seems to be working fine now. So it was just a glitch. Every now and then I have a little glitch with this recording software, and for the most part it works really well, and usually the sound is crystal clear for the most part. But every now and then I have a glitch of some kind, and yesterday was one of those days. But anyway, I'm going to get to the trades pretty quickly tonight. I need to get out of here. It's already late in the evening, and I've got another commitment, so I may move through these a little quickly. I'll try not to go too quickly. I'll try to explain them all like usual, but I may move along at a little brisker pace if I can. So, um, for the most part, we spent most of the day in a trading range. You can see the lows down here. Here's your overnight lows. Here's your overnight highs. We spent 90% of the trading day within that. We did break out late in the afternoon and trade up, and then corrected a little bit into the close. So really all except that last hour from about 1 to 2, we were inside this trading range, and we spent a good bit of the morning in this real tight trading range. We had some good movement early, and then we just kind of went flat before we broke out and went higher. So, however, having said that, we did trend up most of the day, and this trend actually held and pushed us on up higher into the afternoon. So you can see this trend line working up through here. You couldn't really get it confirmed until late this afternoon, and by the time you get it confirmed here, there's only maybe one or two trades you may take. You don't want to take these that you're going long right into the resistance up here. So we'll talk about that when we get to it. But yeah, in the big picture, it was a lot of sideways, but it's also an uptrend as well. So this resistance was tough to get through, but you notice how a lot of people say that this is a wedge. It looks like a wedge, but what causes that is you've got strong resistance, but you also have a trend line, and the trend line's holding, but you can't get through the resistance, so it forms into a little pennant or a wedge or whatever you want to call it. And you hear about those patterns and you read about them in these other places, and I don't believe there's any such things as pennants or wedges. This is what causes it. You have a trend line, you have competing support and resistance, and it just makes it look like those patterns or whatever. And so really this is an uptrend with resistance across there, and that's why you get this type of pattern right there, and you'll see it in other places as well. But anyway, not to get off on that, it doesn't matter anyway. But let me back out, get over here at the start of the day, back out, and we'll talk about the trades. But the first trade, 7 o'clock, came right through this little move over back towards the trend line. Of course, you wouldn't have had this trend line until you got this swing here anyway. So, but we're just going sideways, and you're in a little trading range. You got support here because we pushed up, went above the EMA, and we're just working along. But notice how you made that low, tested it once, you tested it twice, and you got a little matching, 2-bar matching low here. So you can use either one of these as the signal bar, really. The way I would suggest trading this one is to let this bar break above this one, and if it does, then drop a limit order back one tick above the first bar. But that bar is too bearish to use as your signal bar, so use this one and then drop a limit order and see if it'll back up. I don't know if it would have backed up or not. It's possible. It's hard to say. And your chart could have been a little bit different too, so it just really depends on how that's set up on my chart. That's the only way I would trade that, was when it broke higher, dropping a limit order right there and hoping it backed up. and filled you. So it's hard to say if it would have done the same on your chart or not. But anyway, that's the way I looked at it. We did push on up, and you actually had a failed second entry short here, but you're still away from the EMA. You're away from the trend line. I didn't put the other side on there. You don't want to be going long right into the upper trend channel line. You can see that working up through there. So there's a little iffy going long right there. So what I'd want to do is wait and see if it comes back here. It does come back over and gives you a second entry long right here. That's not a very good signal bar on that second entry, but you see that eye and you pull back first entry, then you pull back second entry. So it's a second entry long without a very good signal bar, but there's also some congestion, so it's a little failed break lower. The other thing though is you made this low, you tested it once, you tested it twice, so you got a double test. There's several different reasons to say, hey, I'm probably going to go long here. You got plenty of room to get out. We've been trending up this whole time, really since 4:30 in the morning. And here it is, it's 8:30. So for 4 hours, we've been trending up. That's the first break of the trend line. I think that's worth risking just on that double test alone. It's a relatively small bar too, low risk. And that's a quick, easy move, and we run up. So now you got a break, and you really got two legs up. One leg, then you correction, you got another leg up, and you make that new high. And notice there's a little double top there, and then you kind of break above and fail. Generally, you want to wait on a lower high. I did mark this one green because a lot of times on these kind of trades where you get that little failed break higher, and notice that we had some previous resistance there as well. So that's like a failed break higher above all that resistance. And so a lot of times you'll catch a major high, or if it's down here, you'll catch a major low. So if you're wanting to be aggressive, that's one that you may take. Generally, you're better off to wait on the lower high. It comes here. Not a very good signal bar. A lot of support across there, so you don't really get a chance to enter. There is a failed second entry long right here. It's hard to know if we're at the lows here because originally I kind of had this like this. And that could be right, but it's probably more like a two-tiered channel, and this is probably going to be it right here as you see it. So it's hard to say whether you were going short into there, but you're still a long way away from the EMA, and you had a long move down, and you're basically going short at the very bottom of it. That's never a really good idea, although it is a failed second entry long. It is a breakout pullback short on this support across here. We broke through and pulled back and tested it. And the fact that we turned down that bearish, that's a good sign. So you may take that one. I made it green as well. We come back to the trend line again here. You just get a first entry. There's a hidden second entry here. You can see it move up, come back, and move up. But not a very bearish bar, not a very good signal bar. Again, you've been away from the EMA a little bit, although there's a good chance that we may make another leg down like that one right there. And you can see we came real close to, we actually went a little further, so that would have been a great target. But I just don't see anything I like to enter there. And there's another pullback here with a higher low, but not much room there. Now you've been away from the EMA even longer. So a lot of movement there with not many decent setups. And then, of course, you got your overnight low here, and we got that little failed break lower. Just like up here, you may, being that far away from the EMA and being away that long, you may risk that one. Waiting on a higher low is generally better. But if you catch this low here, you might catch a major low for the day, and you would have here. That would have been the low of the day. That's a great place to enter. You get a higher low here, but not a very good setup. You just got too much congestion there. And you're still a little away from the EMA, but I'd want a better setup than that. I'd want it to at least tick back there and then close above. You could almost argue for that to be green, but with all that congestion there, I just think it's too risky. Wait and see if something better comes along. Then we run up. You actually push through the EMA and pull back, and you get a failed second entry short right there. You could have entered here. It actually broke lower and turned and went out. but I'm not crazy about that one either. Um, you're just too far away from where it looks like the trend line is sitting here. So you may wait and see if you get another entry. And it does come back. It is just a first entry counting off the high, but it makes a nice double bottom. It closes above the EMA, fairly bullish. It was trading way down here and closes back up here, and it does close inside. That's the place to go long. And you can see the smarter traders all jumped in here, and there we go. It actually pulls back again right here. Um, Too much congestion. You got a doji in there, at least 3 bars. It does come off the trend line, but again, I just don't think it's a very good setup. So you can't go long there. And then we finally come back here, and you actually get a second entry right here, but not a very good signal bar. You drop down and you find support. You come back and you find more support. There's a double test here, but you got this trend line working down. And so it's probably not a very good to enter into that trend line, although we do have what looks like a possible overshoot here. So that may mean we're probably going to get a break anyway, but I just think that's a bad place to enter. And you see what happened. I mean, you basically got that big bearish bar. You got an inside bar that looks pretty good, but you see what happens. It went higher and turned and would have stopped you out and then turned right back up again. So, but here you got a double test now. Notice that low. You test it once, you test it twice, and we actually go below the line again and make a little double bottom, and it actually breaks lower and turns and goes out the other side. I like having it going long on a stop one tick above that bar. I wouldn't wait till up here because now you're into all that resistance. That's a huge bar. I don't think that's worth risking, but going long right there, you got plenty of room. And you get an easy scalp, but it comes back and it breaks lower again, makes a new low, but now you got a break of this trend line and a new low. So this may be, this is that little failed break lower that might be an important low, and sure enough, that's the next important low of the day. Again, that's a little risky. You're better off to wait on that lower high that gets through the EMA, and you notice how it pushes through, pulls back, closes on its very out. That's the better place to go long. Now you got a little evidence that with that higher low that we're going higher again, and off it goes. Boom. And you actually get a close outside and you start working lower. Again, you got a little one tick below this little double bottom here, and you do have what looks like a close outside that little short-term trend, and we would be looking for prices to possibly go higher, especially if this trend line's in play and this trend channel's in play. But we really didn't have a lot of evidence then to know that, because we didn't come back here and we hadn't come back up here yet. But if we start working higher, that's where your target should be, and you can see that measured move is pointing in the same place up there. So I don't think you really want to risk going short or going long right here. It did break lower and turn and go out the other side. It looks a little like this pattern, but it's not exact. So I think you're better off to wait on the higher low, which comes here, and then you don't get a perfect signal bar. It's more bullish than anything, but you still got it didn't close on its very high, so you may take that one. And then of course we run up and we do reach the other side, and it looks like we're coming back, and we get a little second entry long right here. That's the first break, so we'll probably try to test that even if we can't make a new high. So I think that second entry is worth taking right there, and it does turn out to be a nice scalp. And then notice you make that low, first entry, second entry. So you got a second entry short right there that fails right off the EMA, and another bullish bar, and we don't have that new high yet. So this is probably going to be a trap that will push up to that new high at a very minimum. And we might still keep going higher as well. So that turns out to be a nice move. You don't get a whole lot out of it, but you do get a quick, easy scalp. You get a higher low here, but now you've got a break of this channel and a new high, so you're going to want a good setup before you go long. And notice it starts working back down here, comes all the way back down and tests this low again, then runs back up, and now look what happens. You got a high, you test it once, you test it twice, you got that big bearish bar, and this is looking like a sideways channel or sideways range. I like going short there just to see if you can ride it back down to the low, which you can. Um, and it actually makes a lower low than this last one. It's just a first entry. That's a possibility, but being that close to the EMA and really being an up-down bar, this is really an inside bar because it's got equal lows and equal high. Just wait on a higher low. Hopefully you'll get one, and you do. It breaks lower here. Test that same place again. So again, you could argue for a double test. Made the low. You test it once. You test it twice. But more than anything, it's a higher low, and that's also a second entry long counting off this high. Pull back first entry, pull back when it breaks higher there at the second entry long, and you got plenty of room to get out. And it actually pushes up and makes another higher high. Of course, it fails instantly, but you don't really get a good setup. You don't get a good lower high right there. You really don't get a lower high until here on a second entry short. I didn't mark that one, but that's a possibility. It is a second entry short. It is the first break of this trend line working down. We are going sideways, and you basically could argue that's back off the highs again. So I'll at least mark that one green. I would have liked to have seen it go back up here and test the blue line, to be honest. But it's still a range, and it still is off the highs, and it is a second entry short. And notice it moves back down, and we find support a little higher again here. I don't like going back long right there because it may just tick up and turn back down here. At this point, you're still looking for prices to come back down to these lows, and it doesn't get there, but it comes back, it tests this again, then you get a double test right there, and it actually breaks higher, turns and goes out the other side. I like going short right there and riding it back down. No way you want to go short right there into a triple bottom. If anything, you want to go long right there. I didn't mark this one because I did. I made it green because it's a triple test. It's a bullish bar. It's off the key entry point, but we just had that big bearish bar, so it may break higher and turn back down, which it does, but it bounces instantly off that trend line again, and now you got a higher low. I like going long right there if you got room to get out, which you do. Then you come back up here. Now you got a double test. You made that high. You test it once. You test it twice. You got a big bearish bar. I like that one just to go short. You get just enough to really get out of that one, and then it bounces again. And now you can see this trend line's holding. You had some evidence of it here, but now you pretty much proved it out that this trend line's still holding all the way up. And you actually get another double test right here. I don't have a line there. Just assume you move that line up, and you can see you made that low. Test it once, you test it twice. It actually broke lower and turns up and goes out. Problem is you don't have enough room right into those highs, and it's been turning down every time. It actually turned down this time again, but it turned back up. And it makes a higher low right here. It breaks lower and turns back up. But again, you're closed below that resistance, and you just don't want to go long into that. But look what happens. It pushes up, pulls back. Now you're above the resistance, and it pulls back and fails instantly and turns and goes out the other side. That's a failed second entry short, and you do have to go long at the high of the day, so I only made it green, but that's a tempting trade because it's probably going to at least run for a scalp and run some stops. This thing just keeps going higher. It comes back and creates a trend line right there, and you get some more bounces off of it, but this is too late in the day. Now you're into the 2 o'clock hour here, and you got a lot of congestion right there anyway, and you just don't you don't get much going on after about, it's coming into the 12:40 hour or something like that. You don't have much going on up here, and I don't see any evidence that I want to short yet. You want to wait on a lower high, and you just really don't. You did break higher here and turn down, but that's so congested by that time. And we're in an uptrend, so if anything, you want to look for it to probably fail out this side and go higher. So I don't think you want to enter there that late in the day, and you just don't get anything else. So somebody asked me why, what's the idea behind second entries? Well, the idea is that market tends to move in twos. That's why we get the measured moves and all that stuff. So second entries are usually two legs of correction, and then prices go back in the other direction. So you get two legs up, and then you'll get right here. Notice you get one leg correction, second leg. So then two legs back, and then you get two legs up right there, then a little two-legged correction, and a second leg up. So this two legs is one. This is another little two-legged correction. There's your other leg to this two-legged move up. And the market just tends to, notice this one coming down. That's one leg correction, then another leg down. So there's your two legs down. The market just tends to move in twos. So that's the idea behind second entry. So I hope that makes sense. Just keep that in mind, that the market always tends to move in twos, and that's why we get the targets, and you measure the legs, and just like right here, you add one leg up, and then when we started higher again right here, you should get a second leg similar, and you do that and it corrects for a good bit. You actually go a little further than a measured move on that one, but I would also measure this one, and we went higher from here. I would look for a measured move, and you can see we got almost a perfect one there again. So always look for those measured moves, and that's the reason we look for those. The market tends to move in twos, and that's why second entries tend to work so good, and why we like to see them. And that's why when you see a little correction, you want to wait on the second entry, because corrections in here tend to be in you get two legs in them. So I hope that's handy, or I hope that's helpful explaining that, I guess is what I'm trying to say. But anyway, I'm going to wrap it up. Believe it or not, tomorrow's Thursday. We'll come back and we'll wrap up our week. No chart lessons on Friday, so tomorrow we'll wrap up our week. We had some, early on we had some good trades here, mostly to the upside, even though you could trade this both ways. I didn't see a lot of shorts that I liked. Especially from here on, we had a pretty good upward tendency. So when you see the shorts, when you got a range, you want to take your shorts off the resistance, which is up here, across here, and you want to take your longs off of support, which is down here, and then of course we had strong support across here, and you had a few trades. So that's the key to it, is what the price action is doing. And just remember, you have the big range, then you have this trend within this range, and you have these up trends and down trends within this trend and within the range, and then you have this little range up here within the trend channel, and you still have trends within there. And so that's the whole idea behind all of this price. That's why price action works on every level. You can drop down to different levels, and the price action is still doing the same thing. So you can have trends within trends, ranges within trends, ranges within ranges, ranges within ranges within trends, and trends within those ranges, and the whole 9 yards. But that's the beauty of price action, and those rules hold true at every level. So that's why you can pretty much pick any time frame and trade it just the same, because it all works exactly the same. But anyway, it's been a long day. I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. But I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.